Hi, Jason Baker here with Rise Real Estate, and I wanted to let you know we have a program. There's two programs that we have to help homeowners. Sometimes there's a situation where the house is just not ready for sale, or you would rather just take an instant cash offer. So we have two programs. One where within 15 days we can close with a cash offer on a home anywhere in Montana. Okay, and the nice thing about that is you can choose your move out date. Typically, there's no inspections, it's just cash, it's easy, and we do that. Now, you'll always make more money listing your property, but for some people, they're just like, look, I'm done, and I need to get out of this thing right away, and we have a solution or a group of investors for something like that. The second thing that we have is a concierge program. Sometimes the house needs a roof. Sometimes it needs paint. Sometimes it needs carpet. We just recently did one that needed interior trim. And we can help advance you the money in order to do that. And it's a really good program. For instance, we had someone up in Stevensville who needed that, a great man, a veteran, and we were able to help him redo basically his whole house. There was some water heaters and some plumbing and some drywall work that needed to be done. I don't know. We probably spent $6,000, $7,000, $8,000 and helped him do that. And he ended up getting top dollar for his house. So, if you're just a little shy or a little unsure if the house is ready to go, we're happy to do a consult and let you know if that concierge program would be helpful to you. I had an interesting conversation with some friends today on the investor front. And what they had said was well, Jason, we're going to buy houses and we're going to flip it. And I know that flipping houses sounds so appealing because you can make some cash, like right off the bat. So they were hoping to make $20,000, $30,000, $40,000, as the market starts to tumble a little bit or come down slowly a little bit. There's no tumbling. So I said, well, have you ever considered buying a house at a price and then not selling it, creating some equity through some sweat equity through fixing the house up, but rather than flipping it, rent it out? And he goes, well, explain that to me. So I'll do my best to do that for you. Let's say that there's a house that's for sale for $250,000, whether you find it off market or it's on market, but regardless, the sales price is $250,000. Okay, you figure there's so you buy it and you're going to go to the bank and you're going to get the money and you're going to put 20% down on an investment property. So you're putting down $50,000 and the loan amount's $200,000. Okay. Or you're paying cash for it, but whatever. You get it, you get that, and you just have it. So it's $250,000, $50,000 down. Whether you're flipping it or whether you're buying it, let's just say you're putting down 20%. Okay. So and then you got to put $25,000 in. So now you're into this house $275,000. You're fixing it up, and let's just say now it's worth $350,000. Okay. So you've got $75,000 in equity. $250,000 purchase, $25,000. In upgrades or interior fixes or whatever you need to do to the house to get it where you could resell it or rent it. Okay, so in both situations, rental and purchase, you're in there at $275,000. Okay, now if you were going to sell it, you sold it for $350,000 because that's all it's worth, right? You sell it. Okay, so you put $75,000, or hypothetically, you're going to use a real estate agent, so 5 or 6% there, right? Take that. Let's say it's 5%. You get $75,000, you take a 5% commission out of that. I don't know, what does that come out to be? So I got my calculator here, because it's late in the day and I don't want to have to do any math. So we get 0.05 times, you're going to have to, you'll sell that whole house with a real estate agent, so it'll be $350,000 times 0.05 equals, you're going to be 17.5 will come out of that 75, right? Okay, or now, so we're going to write down 17.5 over here. Okay, that comes out. Then you're going to have to pay oftentimes 30 to 40% of tax, depending on your tax rate. Because typically, if you don't do a lot of flips, you're going to have to use that as ordinary income. And depending on what tax bracket you're in, you could pay up to 30 to 40% tax if you flip the house. So let's take the bottom line number there. So $75,000 is the profit. So 30% of that, you're going to be left with $52,500 minus that $17,500. So the $75,000 quickly turns into only $35,000 and put in your pocket money. Now, some people say, well, that's fantastic. Well, let's think about this for a second. if you're going to rent the property out, the house is still worth 350,000, right? Yeah, absolutely. You still have 75,000 in equity right there. Boom, right? You got that. You 75,000 equities there. Now you fix it all up. It's all nice. It's all ready to go. You can rent the house. Let's say rent the house out for say $2,500 a month or $2,000 a month, and the mortgage payment's only $1,500, for example, after you put your 20% down. And now you're at $1,500 a month payment. And you're renting it for $2,000, say as a minimum. You're making $500 a month. You still have that 75,000 in equity. Now here's the beautiful thing about what we just did on a house in Dillon. Very similar numbers, and we bought it, and we put approximately $50,000 down. Well, through something called cost segregation, we're able to write off up 30% of the purchase price, okay, which equated out to be approximately a $39,000 actual, literally off how much we owed the IRS at the end of the year, and we put down $50,000. So we were able to buy this house for really at the end of the year about $12,000 down. So it basically, that tax credit ate up our whole, it gave us back or credited us back again what I did not have to physically write out to the IRS in depreciation. So we fully very much took a lot of depreciation year one, which was just great. Then on top of that, there's other write-offs that you can have throughout the year. So I explain this to them, and they go, "Man, I don't know that we're going to flip anymore." So I just wanted to go over some of those things with you. Rather than putting $35,000 in your pocket, why not keep $75,000 in equity right there? Start making $500 a month. Someone else is making your mortgage payment. In every sense of the word, get all of those tax credit and ongoing tax credits. And the government actually loves to partner with you in purchasing property. So think of them as a partner versus an enemy, and you can start doing some of these things. So we know a lot more about that, and we have lots of great guides on that. Should you ever need that or want to talk about purchasing investment property, I'll be happy to just run through my deal that I did. So anyway, have a great day and take care.